This is Josh Aranti with Country Real Estate. Welcome to our Wizard Wednesdays. This is our opportunity to take real estate and break it down into a 101, so it's very easy for all of you to understand. So I have with me today, actually, my brother-in-law, Kevin Sanderlin, who is with Platinum Home Mortgage, been in the real estate industry for 20 years. He is a real estate broker and also has been a loan officer for the last 6 years. Kevin, welcome to the show. Great to have you with us today.
Thank you very much. Hey, Josh. Good to see you.
Absolutely. Absolutely. So I wanted to talk a little bit today about lending and loans. A lot of misconceptions out there on what you have to have, what your credit score should look like, what kind of money you should have in the bank, what kind of loans are available, and how do you get those. We can talk a little bit about that. And then maybe at the very end, we can talk a little bit about how you project looking at rates, and we'll talk about what rates mean in this conversation as well. Sure. So I will just start off with the first question. What is the most important thing, or what are the most important things when you get a loan? What do you have to have ready to go when you talk to a loan officer?
Well, the most important thing in getting pre-approved for a loan is starting early in the process. So the biggest mistake I see buyers make is that they just assume that they'll be able to get a loan. And it happens so often that the buyer fills out the application, sends over the documents, and they can't quite get a loan yet. So sometimes there's work that needs to be done. So the sooner that they can talk to their loan officer, the better, in case there is work that needs to be done. And this can be anything from working on credit scores to coming up with more money for savings, for the down payment and closing costs. So a lot goes into that as far as being financially ready to get pre-approved. So the sooner the better. They really don't need to do anything before talking to a mortgage loan officer. Sometimes buyers feel like they're not prepared. Like, I'm not ready yet to talk to a lender because I want to do this, this, and this. And it's actually better to talk to the lender first, because sometimes a buyer might have something in plan. Like, for example, they say, well, I want to pay off this credit card first. Well, that money might be better spent for your down payments instead of going towards a credit card. So the loan officer is going to help you make those decisions. So just talk to that loan officer. The sooner is the better.
Yeah, I like that. A lot of people seem to put the cart before the horse sometimes, and they end up with an outcome that leaves them disappointed. You did mention credit score, so we'll go right into the next question. How does credit score impact your rate, your payment, and your ability to get a loan?
Yeah, the credit scores are definitely one of the most important parts of getting a loan, as far as especially the pricing. It determines a lot of what interest rate you're going to get, what your payments are going to be, even what types of loan programs you're going to qualify for. So I might as well make this a theme. The biggest mistake I see when it comes to credit scores is borrowers are looking at credit scores, whether it be from Credit Karma or directly from the credit bureaus, Experian, TransUnion, Equifax, and they go online and they see their credit score and they say, I have a 700 credit score. It says it's amazing. It's great. I should be ready to go. But what they don't realize, though, is that they're looking at a consumer credit score, and we have to use something called a mortgage credit score. It's a totally different equation, totally different score. So while you're seeing one thing, when I run your credit, or when you get your credit ran by a lender, they're going to see mortgage credit scores. Those are generally going to be lower than your consumer credit score. So another reason why it's good to start early, so that you actually know what your credit scores are, because it happens more often than you might think.
So you mentioned
thinks they're ready to go and they're not quite ready to go yet.
Sure. You mentioned something in there too about pricing. What is a pricing of a loan?
Yeah, so we use the term pricing to describe the interest rate, the payments, and then if that interest rate will come with a cost or a discount, meaning a credit. So a lot of people don't realize that when the lender is looking at their rate sheet, you don't just have a rate, but you actually have several options for a rate, meaning you could get one rate that has no credit and no extra cost for it. And we like to call that a par rate. So there's no extra cost, no extra credit. This is just what the rate is if standalone. And then you have some options. You can either choose a higher rate, and that will come with a credit, or you can choose a lower rate, and that will come with an extra cost. So to get that lower rate, to pay that extra cost, we also refer to that as a buy down or buying down the rate. So these are different options, and not every lender will tell you about these options. They might say this is your rate, but it's important. Every time I show pricing to my clients, I always tell them about the multiple options that they have.
So sometimes a lower rate may actually come with a larger fee, right? You end up needing to bring more money into the transaction.
Correct. So the biggest determinant of whether a borrower is going to choose a par rate or a lower rate and buy it down, or a higher rate and get a credit, that's going to determine which one they're going to choose is how much money they have to use.
Absolutely. Okay. So what
short funds, they might want to get a credit.
Oh, sorry about that. We had a little audio glitch, so I think I spoke over you a little bit too prematurely. I apologize. So let's just go into what kind of loans are available out there to somebody who's interested in buying a home. I mean, I'm sure some people have heard some of the terms, and I know every part of the country is a little bit different, but what kind of loans are available out there for folks?
Sure. Yeah, a lot of different loan products out there right now. When I'm looking at what loan product will be best for a buyer, the questions I ask them are, how much do you have available for your down payment? And then looking at their credit scores, because every loan program has different requirements in terms of a minimum down payment and in terms of credit scores. So starting off with the ones we've heard about the most, with the conventional loan, the VA loan, then we have ones that are less common, such as the USDA loan, which is a zero down loan, along with the VA loan is a zero down loan. Then you even have some other first-time home buyer programs that are zero down, such as Tehachapi or Golden State Grant for California. Then you have FHA loan. So those are all the main ones that we use.
Okay, so let's just roll that right into the next question. Do you really need 20% down to get a loan?
Definitely don't need to have 20% down. 20% down is really great because you get to avoid private mortgage insurance. It's just a monthly fee that's added on to your payment when you're going to put down less than 20%. However, there are multiple options as far as getting a loan and putting down less than 20%. So starting with the conventional loan, that has programs with 15% down, 10% down, 5% down, and even 3% down. Then you have FHA, which is minimum 3.5% down. And then you have some first-time home buyer programs, which are zero down, and then USDA and VA, which are zero down. So definitely a lot of different options. So if someone is short on funds, they should still talk to a loan officer and see if there's a loan program that fits for them.
Okay, which kind of rolls into a second question based on that too. You talk about 0% down loans, and I think there's some misconception that you can essentially buy a house for free. Can you explain some of the other things that go into the closing of a loan, even on a 0% down loan, that the buyer would still need to have money set aside for, not just appraisals, but other recurring and non-recurring closing cost type things that they would need to bring to the table?
Sure. Yeah. So that's basically a scenario where you run into someone and they say, I want to buy a house, but I don't have any money. So with that person, right off the bat, we're first going to see if we can get you pre-approved for a loan. The Tehachapi loan is one that's not only a zero down loan, but it also has a loan to cover part of the closing costs. Closing costs are generally more than what people realize. So that can vary a lot depending on the loan program and the price range that you're looking at. But let's say we can get the most of the loan closing costs covered and the down payment covered. we're still going to want to see some reserves. So we're not going to be able to put someone in a house in a zero down program and cover their closing costs, and then them not have any reserves, meaning they don't have any money left to pay the mortgage next month.
Sure. Yeah.
So reserves is very important. Reserves can vary depending on the type of loan program it is. But minimum, we want to see at least a month of reserves, meaning you can at least have enough money in the bank to pay your mortgage for a month or two.
Yeah.
So aside from that, you're going to have to pay an appraisal fee, maybe $500 to $600 in that range during the process. You might want to get a home inspection, pay a home inspection fee, which could be $300 to $400. So those are the two upfront costs that we can't roll into the loan or the closing. And those can add up to about $1,000 right off the bat as well.
Mm-hmm.
So
Absolutely.
with those two costs plus your reserves, that's, minimum is kind of what we're looking for, the minimum amount of money you're going to want to have.
So what about things like, home hazard insurance, fire insurance, property taxes, things like that?
Yeah, so those are all the part of the monthly payment. So you don't need to, you do come up with a little bit at closing underneath your closing costs. So then there's the monthly part of it. So
you're talking about like if you're going to do an impound account, right, where you're going to make your principal, interest, your taxes and insurance payment all in one. But even at the close of escrow, sometimes there's some small prorations of those things involved as well.
Yeah, correct. So you're going to have the impound account is basically what 99% of home buyers opt to do. So it's where we're going to collect a little bit of money up front at closing to cover some of your future property tax bills and homeowners insurance bills. And then we're going to take that money that we're collecting up front and we're going to put it in a side account. It's going to be a side escrow account. And then that account is going to go ahead and pay those property tax bills and homeowners insurance bills when they're due, so that you don't get hit with two big bills every year for thousands of dollars. So it's much easier that way. So most people choose to get the impound account.
Okay, so that's great information, Kevin. So what is let's go to the next question. What is the importance of getting pre-qualified or pre-approved before you start looking for homes? And this is one that I talk about a lot too, because I think, and you can kind of expand on this, but I see on my side, people not knowing exactly what they can afford. So it makes it difficult for the realtor that's helping you look for a home, know what price point to look for. Because without talking to somebody, you really can't tell what payment's going to make you comfortable and where you could be looking at houses that are too expensive or houses that aren't expensive enough. And you could be shortchanging yourself on getting some of the features and amenities you're looking for in a home. What other reasons would be great to pre-qualify prior?
Yeah, exactly. Aside from not knowing what your comfort range is for payments and what you qualify for, there's also all the other things that come along with getting a loan, such as all that preparedness as far as getting pre-approved, where you might have to pay off some debt. You might have to save up some more money for a down payment, or you might not realize that your monthly private mortgage insurance is going to be several $100s a month. So there's so many different factors that you got to take a look at before you go out shopping for houses, so that you're shopping for a house that's in the budget that you are going to be satisfied with. Yeah,
absolutely. And then finally, why is it important for the lender, the realtor, and the buyer to have open communication? And on that same vein, what is the confidentiality part of it? Because obviously not every buyer is going to want the realtor to know their financial situation.
Right. Yeah. The buyer should understand that what they tell the loan officer is confidential. So, because as a loan officer, we look at everything that you can think of financially in this person's life. So, So, we can't just go tell the realtor or other people or anyone about that confidential information. So when we are updating the realtors, we have to let the realtors know, is this loan solid? Is it ready to go? Or are there still things that you're working on? Or do you need more time? So the most important thing is timing, because the lender and the realtor have to work together to time the pre-approval process, being ready to get your loan, and finding the house when you want it. And everything has to be timed perfectly. So most of our conversations between the lender and the realtor is about timing, and making sure that everything can happen in a timely manner, that the offer is written up in a way that fits what the buyer can do with their loan and with their timelines and deadlines. So most of it's about timing. And then if something comes up where there is a surprise and we do need to let the realtor know, then the loan officer, will always ask my borrower, hey, I need to update the realtor this. Is it okay if I say this? So I'll always get that okay before I share any confidential information.
Yeah, absolutely. And I think from the realtor side, before I write any offer, I'm always having that conversation with the lender just to make sure that I'm, again, writing the offer the correct way, especially if there are closing costs help needed, then I can be more creative with my offer to the seller. And also, again, from our side, we never want to write something that we have to figure out how to get out of, right?
Yeah.
Usually that means it's going to cost money to get out of a bad situation. So always making sure to do that. And then again, I think a lot of people need to realize that it's more than just the realtor and the buyer. There's also the realtor and the seller, and there's communication that needs to happen back and forth there. And it can be difficult for a realtor to ask a client, hey, can you ask the lender these things? Because it's almost like we're speaking a completely different language. And the realtor and the lender are on the same page with the language, the lingo, and we know what we're talking about. So having a really good relationship with a lender is really important. And that's, I think, probably the biggest reason why you'll hear realtors say, hey, do you have a local lender? Do you have, or here's the list of people that I've worked with a lot, and I've already established a rapport, a communication system with, because man, it sure does make the entire process more smooth when you know you have a team working for you instead of a bunch of individuals trying to figure out how to navigate a transaction.
Yeah, definitely. Communication is huge. I mean, you have a lot of moving parts and a lot of scenarios, and every transaction is different. So it's all comes down to communication on how things are handled.
Yeah, perfect. Well, Kevin, thanks for taking some time with me today. This
You're
is
welcome.
Our first Wizard Wednesdays, making real estate a 101 real basic thing. And I would also invite anybody who has any questions about this video just to place them in the comments below. And between myself and Kevin, we can get back to you individually and answer those. Or if you're looking to enter the market, buying, selling, or whatever, you need the services of either one of us, we are definitely here for you 24/7.
Yep, that's right. I have been called Kevin 11 because I'm open 24/7. So
you got the truth. You got the truth. All right, Kev, thank you very much.
All right, you're welcome. Have a good one. Thank you.